Hi everyone, let's cover my Elliott Wave analysis on Bitcoin on the 4-hour time frame and the 1-hour time frame. And before I jump into the different individual scenarios, I like to cover the probabilities. So in general, the probabilities are highest that the move to the downside since the all-time high is a corrective structure. Therefore, it increases the probabilities to move up at a later stage and take out the all-time high. So that is the general higher time frame bias. However, this move towards the upside is a higher probability corrective structure, increasing the probabilities to still take out this low and only look for price to move up at a later stage. Once I start covering the different 4-hour time frame scenarios, you will see that in all of these cases, we are looking still for lower prices, but in all of these cases, we're looking for price to move back towards the upside after. When I cover the 1-hour time frame scenarios, you will see that in both cases, we're looking for price to still move to lower levels and take out this low sitting at about 107.3K. Now, the first scenario would be a double zigzag, a W, X, and then looking for a wave Y. Wave X here is short in time. It is very shallow, but that can happen with the wave X. It's not something that would necessarily invalidate this scenario. Now, in this case, the real invalidation is the high at 113.5K, and you look for a wave AB and a wave C to the downside, a 5-wave structure down to finish wave Y, and then look for price to move towards the upside. And after a wave Y, you generally expect the all-time high to be taken. Another option is a larger corrective structure, and it may look very complex, but basically we have a larger ABC here in a wave W. We either look for wave X to finish here and then follow the blue line, which is then a zigzag to the downside in a 5-3-5, finish your wave Y here, look for price to move up and take out the all-time high, or alternatively, we still look for a bounce in the same area, but then instead of moving up in a 3-wave structure, which you want to see in the blue line, 3-wave up, another 5-wave down, you're moving to the upside in a 5-wave impulsive structure following the yellow line, which then means that your wave X is going to be a larger structure. In that case, we would look for a flat A, B, C, flat structure for wave X, and then after wave C, we look for another move towards the downside in a wave Y. But in general, what you're looking for here is price to move towards the downside, take out the low, and create a bounce, which is very similar to this scenario that I just presented before. Today you have a WXYXZ, very rare structure, but still interesting to at least keep an eye on. WXYX, and then look for a Z, meaning a 3-wave structure to the downside. Common target for your wave Z would be the lower end of the channel, which is taken from the low of W to the low of wave Y to the high of the first wave X. And if you would use the fibs and you compare wave Z against the size of W and Y, your area for Z would be somewhere between 103K and 99K. Now then we go to the 1-hour time frame. And before I really cover the 1-hour time frame, I shortly want to cover you this Discord post. This was yesterday, 9:15 p.m. Central European Time in the Elite membership group. And what is important here is that I was observing that move towards the upside, and I mentioned here that the multi-1-2 needs to see strong acceleration, and price was hovering here and moving sideways. And I didn't really like to see that. I wanted to see price continue towards the upside. Instead, it started to move sideways. So I said the longer price is ranging sideways, the worse it is for the bulls. Also, if we consider a multi-1-2 from the low, then we already had like 5 1-2s or 6 1-2s, and it starts to be a little bit awkward. It starts to be a bit much. So therefore, the conclusion was, when we look at this local move to the upside, from an Elliott Wave point of view, a WXY increases in probabilities. And that is the one that I have here on my chart. So this is a WXY double zigzag on my chart, ABC in a W, wave X, ABC in a wave Y. After a wave Y, which then found resistance at the order block on a 4-hour time frame. You find the same one on the 6-hour, but at least here on order block, plus we had a daily level here as well, found resistance. You look for price to move towards the downside. Now this move towards the upside here supports the higher time frame narrative then of still taking out this low at least once more, because a WXY to the upside is not a bullish structure. Now we can have a finished WXY here. Alternatively, you create another high. Look, it doesn't really matter. These are just like the finer details. You can move up, touch some higher resistance here with the monthly naked point of control, weekly naked point of control, create a larger WXY, and then a wave A to the upside, running flat in a B. That's your C, that's W, flat structure in a wave X, another ABC up in a wave Y. But these are just details because it doesn't change the bias that the move towards the upside here is a higher probability corrective structure, even if you do move to the upside once more, finish Y higher, and then look for price to move towards the downside. In other words, the interest on the 1 hour time frame is higher for price moving down and still taking out this low, because the move to the upside is a higher probability corrective structure, which therefore on the 4 hour means that the scenarios that I'm looking for are still taking out this low. And then of course, in the different 4 hour time frame scenarios, we're still looking for a bounce towards the upside. We're not looking on a 4 hour time frame for very strong continuation to the downside to much lower levels, because as per my video of yesterday, where I covered the most bearish scenarios being the multi-1-2s, we discovered that the probabilities for the multi-1-2s are not high compared to corrective structures, which is the reason why I will count all of this corrective primarily, with the alternative being bearish scenarios. But in the video, I mainly cover corrective structures. And then we have the levels. These are the volume levels that I currently have on my chart. So have a look, feel free to copy them if you wish to. These are my favorite levels. And then we have the time frame horizontals. I removed the daily that we had over here, which was a resistance together with the order block. You can nicely see the order block here as well on the 4 hour time frame. There's one green candle, maybe on your chart, mine is gray. Move down, one candle up, and then poof, you fall to the downside. Nice little bit of resistance. So these are also levels that I have on my chart. Now we do have some news this week. Today it is a Thursday, so we have some news at 4 p.m. Tomorrow, Friday, should be probably more interesting though from a volatility standpoint related to news, 2:30 p.m. Central European time. And then we get to the probabilities. So as per the analysis of yesterday, the probabilities in general are highest that the move down is a corrective. So I prioritize corrective structures still proven otherwise. In other words, probabilities are highest to still take out the all-time high at a later stage. And I will prioritize in my content, as I've basically been doing over the past weeks. I prioritize corrective structures to the downside compared to the multi-1-2 until proven otherwise, which basically means you need a very large wave 3 to much, much lower prices, and then create a couple of wave 4s and wave 5s to really show an impulse to the downside. At the moment, probability is higher, it's corrective. Now on a 1 hour time frame, this move to the upside, higher probability, corrective structure. We can't actually count a motive wave structure in here. We cannot on the 1 hour time frame count an impulse to the upside here, a 5-wave structure, 1, 2, 3, 4, 5, because there's too much overlap, so that doesn't work. We can't count a multi-1-2 because the structure changed now, which is an invalidation, and we actually cannot count a diagonal here as well. So therefore, probability is higher, it is corrective, and as per my post yesterday in Discord, I'm looking at a WXY to the upside here on the 1 hour time frame, which increases the probabilities to still take out the low at a later stage. On the 4 hour time frame, and by the way, that also means that even, if this is the high perfect, we go down. If you take the high once more, I'm still looking for price to move down later. What's going to be interesting, just a little tip, I suppose, what can be interesting is locally to keep an eye on a move towards the downside here. So an impulsive structure. Let me quickly show this as well. Plop, plop, plop. So this. So Elliott Wave simplified. A bit of a grinding structure at the start. This is the local price action. You get a sharper move down and then wait for a couple of 4-5s or at least a more sideways structure again. A bit of a grinding, overlapping structure to the downside, which can give an opportunity to look for a bit of a bounce back towards the upside, right? At areas of support preferably. So overlapping, quick move down, and then get another more like sideways structure. Maybe you're going to create it here. Doesn't really matter. But if it happens close to or at an area of support, it's interesting to look for a bit of a move towards the upside. If the move towards the upside is a 3-wave corrective structure, you're going to look for continuation down to at least take out the low of this move. If the move towards the upside is a 5-wave impulsive structure, then you're looking for another A, B, and you could create a C to the upside to the monthly naked point of control higher. That is then looking to end a wave Y at that moment in time, and then a move towards the downside. So the local price action, it's very interesting to keep an eye on the 50-minute, the 1-hour time frame. But of course, in my content, this is detail. I do like to cover like also the more general picture on a higher time frame. Still looking for all-time high, higher probabilities. This is corrective. 1 hour general idea, whatever here, take out the high, yes or no, or just move down, doesn't matter. Probabilities are higher. It is a corrective structure, increasing the probabilities for price to take out this low over here. And on the 4-hour time frame with the different scenarios, if I open it all, you can see that we are looking, once price takes out the low, we are looking for price to find support and look for a move back towards the upside. Probably continue the range for a little bit longer. So that is what I write here. Probabilities are higher for an unfinished corrective structure. In the scenarios presented, it would be nice to take out the low at some point and look for a bounce back up. What follows will give us more information. I hope that this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.